This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Monday, July 13th, 2026, and the weekend brought zero relief. The panic we warned you about has spilled from the trading floors directly into the real economy. Supermarket rationing triggered massive retail hoarding, while tech giants spent their weekend aggressively locking up physical mining assets. Here is your explosive Monday open. First up, the commodities flash. Weekend food runs have crushed retail. The agricultural crisis has officially reached peak visibility. After major chains announced weekend purchase limits, consumers panicked. Social media is flooded with images of stripped grocery shelves across North America. Wheat and corn futures are locked limit up on the open, while consumer packaged goods equities are getting hammered on margin compression. Meanwhile, tech titans are buying out copper. The rumors were true. A massive AI hardware consortium has announced a hostile cash buyout of a South American mining conglomerate. LME Copper is violently gapping up toward $18,100 per ton. They aren't just buying the metal anymore, they are buying the source. Brent Crude has gapped to $117.20. The African maritime choke point has created a structural deficit at European refineries, forcing aggressive emergency bidding. The African maritime choke point has officially created a structural deficit at European refineries, forcing them to bid aggressively for emergency Atlantic spot cargoes just to keep their facilities online this week. Finally, the silver OTC premium is blowing wide open. COMEX paper silver is frozen in volatile chop, but the physical market is absolute chaos. Tier 1 industrial buyers are reportedly paying up to $140.00 per ounce to guarantee physical delivery before the month ends. Paper is irrelevant. Physical is king. Let's dive into why AI giants are bypassing markets to buy mines and how the grocery panic alters the Federal Reserve's playbook. The data confirms the transition to a hard asset economy is accelerating. Paper contracts are failing, and vertical integration is now a corporate survival requirement. Look at the mining buyout era. For a year, tech giants drained the vaults. Now that the vaults are empty, they are targeting the source directly. Grid developers and EV manufacturers will now have to fight to the death over a shrinking pie. The $18,100 price tag is just the beginning. This brings us back to the grocery run. The rationing triggered psychological panic, and shelves were cleared in 48 hours. Inventory is stripped. When an AI company owns the mine, that copper never hits the open market. It goes straight into proprietary server racks. This permanently shrinks the global free float. Raising interest rates cannot plant more wheat or undo the heat dome. We are in a pure stagflationary shock, and energy is the regressive tax driving it. African maritime reroutes have stretched shipping fleets to the breaking point. With ships spending extra weeks at sea, oil prices remain structurally elevated on logistical friction. To recap, copper is gapping to new highs as tech buys the source, energy has a structural floor at 117, and the stagflationary shock from the grocery panic is just getting started. This is the new reality. Here is the TradeFlow take. AI buyouts of copper mines prove titans no longer trust paper. Do not sell your physical metal miners. You want to be the target. Maintain heavy short exposure to consumer discretionary and grocery equities. The food panic will devastate their Q3 margins. Ride the energy baseline up. Make sure your master dashboard is locked onto these structural shifts at TradeFlow TV. Stay liquid, stay sharp, have a defensive Monday session. We will see you tomorrow.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.